Joining me now is White House Deputy Press Secretary Kush Desai. Kush, what do you want to say about the jobs report, which, of course, came in much weaker than expected, with a decline in job creation for the month versus expectations of job growth?
Well, one month of data that was affected by unseasonably cold weather and a record-breaking strike on the West Coast and in Hawaii doesn't make a trend. The trend that we've seen over the past month and even over the past few months is that this administration is focused on unleashing robust private sector-led economic growth. There is still net private sector job growth in the past in the first 2 months of 2026, and so the president's doing this by slashing taxes, by slashing regulations, by using tariffs, which are driving an investment boom. Trillions in investments are flowing in from all across the world. There's a capital expenditure boom by corporate America, and so as those investments continue taking effect, as our policies continue taking effect, we're very confident that we're going to see the job market we saw in President Trump's first term. And look, the other fundamentals are very strong. Wage growth, productivity growth remain very robust. The ISM index came in strong. And so I think this job report's going to come off as a bit of an outlier here in the months and weeks ahead.
A new Fox poll shows more Americans think inflation is actually under control compared to 3 months ago and this time last year. But rising gasoline could threaten that. Gas prices are up more than 11% from a week ago. Oil surging, and Politico is reporting that White House Chief of Staff Susie Wiles is sounding the alarm on gas. Industry executives told Politico the White House is looking under every rock for ideas. Would the president consider tapping into the strategic petroleum reserve?
I'm not tracking that being discussed, but again, as I said, I don't think there's any panic or alarm quite. The entire administration, whether it be the White House's National Energy Dominance Council to the Departments of Energy and the Interior, are working in lockstep to ensure that the markets remain stable. And so there is a plan here. We're working step by step. We're working with the private sector and working with their allies, of course, whether it be our new partners in Venezuela or in the Gulf, to ensure that the markets remain stable.
Let's talk about that, because the president came up with a plan to loosen things in the Strait of Hormuz. We've been talking about the fact that this one waterway is the place where 20% of global oil is transported every day, but insurance companies don't want to insure the tankers, so it has become a standstill there. What specifically is the president doing to get those tankers moving again?
Sure. Well, the Development Finance Corporation, which, remember, the president, thanks to his authorization, their investment cap has increased almost fivefold from about $40 billion to $200 billion, is working with the Treasury Department and working with the insurance market to figure out a way to provide insurance coverage, risk insurance coverage, to ensure that oil supplies and energy supplies keep moving out of the Gulf. And the U.S. Navy, as the president has also said, stands by to potentially escort those ships out as well. So we're taking a very broad-based approach here to ensure that this short-term disruption doesn't cause more ripple effects throughout the global economy.
A federal judge, a trade judge, is ordering the administration to now refund more than $130 billion in tariffs after the Supreme Court ruled them unlawful. More than 2,000 companies have already filed lawsuits for refunds, and now you've got 24 states suing over the president's new 15% global tariffs. Not to mention that there is also expectation that the U.S. government will owe interest, $700 million in interest per month on that 130 plus in refund obligations. How is this going to play out, Kush?
Well, I'm not going to step into ongoing litigation. I'll let the Justice Department handle that. But overall, this administration remains committed to using tariffs to safeguard our national economic security, to address our balance of payments crisis, and to make sure that the era of America Last Trade policies comes to an end. And so we remain focused on cementing our trade deals, signing more new trade deals, and getting more investments in using tariffs.
Kush, great to have you this weekend. We so appreciate your time. Thank you.
Thanks. Thank you.